So in my 33 years on this planet, I've made a lot of stupid decisions with my money. I traded penny stocks in my early teens. I bought silver at a near all-time high, and I'm still holding on to it to this day, hoping it at least gets half of its value back. And I spent way too much money on in-game purchases on the game MapleStory. If you know, you know. If you don't, please don't look that up. But there's one decision by far that's costing me over $200,000 in my net worth that I've made in the last couple of years, and I'm a little embarrassed, but I think it's a good lesson for me, so I'm going to talk about it. And before I get into it, if you're new here or tuning back in, hello there, beautiful people. This is Nathaniel with the Fat Stacks Academy, where it's our goal to help every American worker make thousands of dollars every year through financial optimization and the best bank account and credit card bonuses. So if you're up for saving some of your fat stacks, hit that like button and let's get stacking. I'm not a financial advisor and this is not financial advice. The information in this video is intended for educational and informational purposes only. So we talk a lot on this channel about how to make as much money as possible as we can from banks and credit card companies and leveraging their greed against each other, as well as just optimizing our finances to make sure we're making as much money from the bank as we can and not the other way around. But I get asked all the time, Nathaniel, I'm making so many fat stacks of cash, I'm starting to get back problems because it's starting to build up so much under my mattress. After I pay off my medical bills from my ruptured disc and lower back pain, where should I put my money? Well, person I've definitely heard from and definitely did not just make up for the purposes of this video. I can't tell you where to invest your money because I'm not a financial advisor. I'm just a normal guy with a painting business, but I can tell you what I personally do with mine to hopefully grow it over the long term and set myself up for financial independence. To put it short and sweet, I just buy index funds that are broadly invested into the US stock market. I personally use Schwab brokerage account and buy their fund SWTSX primarily, and that's what I've been doing for the last 5+ years or so. I've tried trading stocks in the past and did okay with it, but it was honestly too stressful and I wanted to spend my time investing in my business, myself, my own life, and just following tickers was a bit too much stress. It was maybe 10 years ago I actually read an article from the famous blogger Mr. Money Mustache that talked about this investing strategy that's basically touted by Warren Buffett, a lot of other wealthy people, for the average person to be able to get really amazing returns that generally outperform even the best financial advisors or traders and other experts. And that is to just buy broadly into the market, hold on to it, never sell it until you're ready to retire, and change your assets to stocks and bonds and cash to make sure you're able to withdraw while still making the money grow over time. So since that really cemented and I finally had some extra income to start maxing out my IRA, I basically started doing that in 2018 in both of my wife's and my own IRA. Since I'm self-employed with my painting/wood refinishing business, I don't have a job where I can contribute to a 401k, so I've had to use other means like opening individual retirement accounts, a SEP IRA, and then I technically do have just a little bit of money from my time in the military in my TSP, which fortunately is so locked away and I don't even really know how to access it that I couldn't even mess that one up. So basically since early 2018, every single month, I've contributed about $500 into my IRA and dollar cost averaged it into the market with the fund SWTSX, and have done the identical thing in my wife's IRA because she likes that I handle the finances. And it turns out the less I handle them, the better we tend to do, which I'll talk about in a little bit. So we started at the exact same time, we invested at the exact same time, but there's one critical difference I made to my own IRA that I'm going to show you how it's losing me about $200,000 in my net worth by the time we're projected to retire right now. So if you don't remember the ancient history of 3 years ago, during the COVID scare, I was listening to the news on the early onset of the virus. No one knew what was going to happen. There were people dying in Italy. The supply chain was starting to get disrupted, and the market was listening to the news too, and it dropped over 20% in one day. I was also alive for the 2008 financial crisis, but wasn't able to invest then. But I still remember how it crashed and being a little annoyed that the government just bailed them out. And for some reason in all of this frenzy, I had the naive thought that, oh, there's no way the government will do that again. And there's a good chance the market will just continue to drop. So I made a very impulsive decision in March of 2020. I only did it on my account because I did have enough knowledge of thinking that for this investment strategy to work, you should just buy, stay in the market, don't sell when the market's fearful. So I kind of split the difference and I just sold the stocks in my own IRA. So I had liquidated it and had just cash in my own IRA while my wife's stayed invested. And then over the course of 9 months, I still wanted to invest it. So while she was still just doing the steady $500 a month invested into the stock market over time, I was investing that same $500 on top of the assets that I had sold over 9 months or so until we were caught up with all of our money being invested. I didn't think about it much at the time. It was all just kind of automated in the background, getting drafted out. But I just recently took a look at our financial statements and it was still good for me. It was better than I had not invested, but it's going to turn out to lose me a lot of money in the long run. So as of the recording of this video, my IRA is sitting at $44,083. I'd invested about $35,000 to get to that amount, so it's actually a pretty good return overall. But if you look at my wife's account, on the other hand, she just let it sit there, set it and forget it, didn't do any crazy selling or buying. Hers is now sitting at $53,982. So just by selling when it was low and dollar cost averaging as the market was recovering during that 9-month period, I lost over $9,000 in value, factoring in how it's recovered up to this point. And since this is my long-term retirement strategy, I decided to really beat myself up by looking at what my account versus my wife's account is projected to look like in the next 65 years, assuming we don't even invest anymore in our accounts. So just taking that base number on screen for my account and the base number on her account, I'm just assuming they each earn 10% over the next 32 years until we both retire. My IRA is projected to make around $930,000. And my wife's, on the other hand, is projected to make $1,139,000. So if we do the math and subtract the two, hers is projected to grow to over $200,000 more in value than mine, assuming we stay at a reasonable 10% APR over the 32 years until we retire. Hopefully we retire a lot sooner than that, but I'm just projecting a standard retirement age in this case. So overall, I'm not too upset with myself because I still did stay invested and my money has grown a lot more than it otherwise would have. But it is a really nice reminder for myself to just kind of set and forget it. And that's how I'm going to continue investing going forward. I'm going to try not to harp back on this too much and not treat myself too poorly because we are investing, we are doing okay. But it is a really strong reminder for me that tinkering with things, especially when emotions are high, is not a good idea for long-term wealth building. So for me, when I'm in my 60s, I hope I don't look back and think, wow, it would be nice to have an extra 200,000 by now. I'm hoping for my own goals, I'm actually able to retire a lot sooner than that, but we'll see how everything goes. All right, guys, thanks so much for watching to the end. This is a little bit of a different video, so let me know in the comments if this is something you guys are somewhat interested in, or if I should just stick to bank bonuses and near-term fat stacks of cash. But if you did find it valuable, remember to like the video so it can spread far and wide to the algorithm so more people will not make the stupid mistake I did. Let me know in the comments your investing strategy and how you view your wealth building over time. And as always, if you want to be reminded of how beautiful you are on each and every upload and learn how to make a new fat stack of cash, hit that subscribe button. Click on this video over here if you're feeling dangerous, and click on this playlist over here for the best bank account and credit card bonuses every single month. Thank you guys so much for watching, and I'll see you in the next one.